Transactions. I have already explained you the definition of transaction. Transaction means any event, any incident, any given take of the business that has got money value, that is called transaction. And in business, every day there are so many transactions. And all these transactions are of two types, either cash or non-cash. In cash transaction, cash moves immediately. Either cash comes in the firm or it goes out of the firm. In non-cash transaction, cash doesn't move. I mean to say it doesn't go out or it doesn't come in. All in these non-cash transaction, sometimes they are also called credit transactions. So I'm going to explain you about the credit transactions. You know, in credit transactions, there can be credit sales or credit purchases. When there are credit sales in the firm, it means the goods are sold to the customers and the money is not received immediately. If the customer doesn't pay us cash immediately, we call him debtor. And at the end of the year, always all the debtors are shown in the balance sheet on the asset side. And so far these credit purchases are concerned, we always purchase the goods from the supplier. If we purchase the goods from the supplier and we don't pay the cash immediately to the supplier, that supplier is called creditor. And creditor is a liability of the firm. And the amount of the creditors is always shown at the end of the year on liability side of the balance sheet. And one more important term you must know, that is carriage. C-A-R-R-I-A-G-E. Some people call it carriage and some people call it carriage. But I would like to call it carriage, and it's up to you. I'm not teaching you English. Carriage means the cost of carrying goods. You know, during the business, sometimes you have to purchase the goods and sometimes you have to sell the goods. If you buy the goods from outside, you will have to pay the cost of carrying the goods. For example, you are running a bookshop in Delhi and you buy the books from the publisher from Lajpat Nagar. So if you arrange some truck or something else, any other transportation to take the books from Lajpat Nagar to your shop, that will be called carriage on purchases, or you can call it carriage inward. And suppose you get the order from Chandigarh and you arrange some truck or some other mode of transport to carry the books to the library of Chandigarh. So the cost paid by you to carry the goods to the customer will be called carriage on sales, or you can call it carriage outward. So now you know the thing. Carriage can be of two types, either carriage on purchases or carriage on sales. Carriage on purchases is called carriage inward, or carriage on sales is called carriage outward. Sometimes in question it is mentioned only carriage. They don't mention whether it's inward or outward. If the question is silent about this thing, you will always assume that this is carriage inward. For example, if the question says carriage paid rupees 300, now you are getting confused whether it's carriage inward or outward. You will assume this is carriage inward. Let's take one more practical question. Transaction number 1, A starts business with cash rupees 5,000. Transaction number 2, purchased goods rupees 1,000. Transaction number 3, sold goods to C, costing rupees 800 for rupees 3,000. Transaction number 4, paid carriers inward rupees 1,000 and closing stock as on 31st March 2013 rupees 200. So journal entry of first transaction will be A starts business with cash rupees 5,000. The journal entry will be cash account debit to capital account rupees 5,000. Now transaction number 2, purchased goods rupees 1,000. So on debit side, first option is debit all expenses and losses. We have purchased goods on cash, so there is no question of expense or loss. Move to the next option. Debit what comes in. What has come in? That is goods. So write down goods. Now let's start hunting for credit. On credit side, credit all incomes and gains. We have purchased goods. There is no question of income or gain. Move to the next option. Credit what goes out. Anything has gone out? Yes. Cash has gone out of the firm because we have purchased goods on cash basis. So you will write down cash. So now write down the suffix of account on both sides, purchases account, and on credit side, cash account. Use prefix on credit side, that is to. So purchases account to cash account. Move to the format of journal entries. So you will write down purchases account debit to cash account, rupees 1,000. Now sold goods to C, costing rupees 800 for rupees 3,000. We have to make journal entries. You know, when we draw journal entry for the sales, we are never ever concerned with the cost of goods, and the cost of goods is rupees 800. Forget about that. So simply transaction for V people is sold goods to C rupees 3,000. So what will be the journal entry? Because it's a credit sales, the name of the party is given, that is C. So the journal entry will be C to sales rupees 3,000. Now the journal entry paid carries inward rupees 1,000. So on debit side, debit all expenses and losses. Yes, we have paid carriers inward. This is the name of the expense. So write down carriers inward. On credit side, credit or incomes and gains. No, there is no income. Credit what goes out. Anything has gone out. Yes, cash has gone out. So write down cash. Use the suffix on both sides, account, and use the prefix of to on credit side. So carriers inward account on debit side and to cash account on credit side. So on journal entry it will be carriers inward account debit rupees 1,000 to cash account rupees 1,000. So narration will be paid carriers inward. That's all. And the closing stock as on 31st March 2013 rupees 200 rupees. In this way we have completed the question.